But to get a quick perspective on this, Sajjid Chinoy, Chief India Economist at JP Morgan, joining us on the phone line. Sajjid, thanks very much. I know you're pressed for time, which is why I'll make it quick. What is the significance of the government setting the 4% inflation target for the next 5 years?
I think this is a very important and very positive institutional development. Remember, last year, the government and the RBI signed on to an agreement which said that it would target 4% inflation in the medium term with a band of plus or minus 2% for all subsequent years. And that is the assumption on which domestic investors, foreign investors, households markets have been operating. So it was very important that the government double down and reinforce its commitment to those targets. You know, inflation targeting is all about managing inflation expectations. And it's very hard to anchor inflation expectations if you have a moving target. So I think today is a very positive development and rounds off a very good week. You know, things like the GST and the latest notification, these are true institutional reforms.
Okay, I wanted to quickly get your assessment of the implication on two fronts. What do you think this will do for foreign institutional investor interest? Because you've underlined the importance of, you know, anchoring inflation expectations. And B, what implications does this have for the interest rate cycle?
I think foreign investors will take great heart from this. And I think they will now be convinced that the government, the RBI, is very serious about keeping inflation under control in India and preserving macroeconomic stability. Those are huge signals to send out to the global community. You know, we had a period of 6 years where CPI inflation was running at close to double digits and led to all sorts of problems and distortions in the economy. So now investors will be convinced that with inflation targeting embedded into the RBI Act, with the formation of a monetary policy committee, you know, imminent, with a commitment to a 4% target over the next 5 years, these are very positive. And I think the first, you know, beneficiary of this will well be the currency, because I think when you keep inflation low, one thing that you do see is pressures on sustained, unhinged currency depreciation typically evaporate.
Okay, one final question on the road ahead. Clarity on the members of the Monetary Policy Committee, the tone of the monetary policy going forward. What's the lay of the land as you see it?
No, I think, you know, I'm sure the RBI and the government will choose these members carefully, and we'll have very good choices. There's no dearth of talent in India. But what I will say is, you know, once you have institutional targets like 4% with a band, the personalities become less important, because now whoever is on the MPC only has bounded discretion. You can move interest rates to the point that you're not violating inflation above 6%. So I think having an MPC is great. Having a diversity of views is very important. That's how decisions are made in most advanced economies. But the fact that you have an MPC along with bounded discretion, I think, is the combination that most people would like to have. And I think after today's announcement, we have that.
Sajjid Chinoy, I'm going to leave it at that. Thanks very much for accommodating us. Busy afternoon ahead for you. Thanks once again.